Recently, the S&P 500 just smashed through 6,300 for the first time ever, and somehow everyone's acting like Trump's August 1st tariff deadline is just background noise. The S&P 500 has gained roughly 5% since Trump took office, notching 8 record highs in just the past month. Meanwhile, the VIX Volatility Index sits at remarkably low levels despite unprecedented trade uncertainty. Here's the kicker. This is all happening while we're literally counting down to what could be the biggest trade war escalation in modern history. Alright, let's break down what this chart is actually telling us, because it's honestly kind of nuts. You're looking at the S&P 500's journey from its April lows to today's highs, up roughly 23%. The technical picture shows us that we're trading well above the 20-day moving average, which is textbook bullish momentum. What's fascinating is how cleanly we've held above the April support level. No retests, no fakeouts, just pure institutional buying pressure. According to LPL Financial, this V-shaped recovery was one of the most powerful post-correction rebounds in stock market history. But here's where it gets interesting from a technical standpoint. We're now in uncharted territory, above 6,300 on the actual S&P 500 index, with virtually no overhead resistant levels to guide us. Now let's talk about what's been more impressive, the NASDAQ's absolutely bonkers performance. The tech-heavy index has gained 37% since its April low, which is frankly mind-blowing for such a short time frame. We're seeing the NASDAQ hit a 62-day streak above the 20-day moving average, the second longest on record since 1999. From a technical perspective, the NASDAQ is showing classic momentum acceleration. We've broken through multiple resistant levels and now trading in what can only be described as euphoria territory. The QQQ ETF is sitting at $564, well above all major moving averages. But here's what's concerning. When we look at the breadth data, we're seeing fewer stocks participating in this rally, which is typically a late cycle warning sign. What's really wild is how this tech rally is being driven primarily by retail investors rather than institutions. Wall Street money has remained surprisingly muted according to Barclays, which retail has poured over $50 billion into global stocks in just the past month. Remember what happened after the 1999 streak? The comparison chart tells a real story of what's happening in the markets right now. Both the S&P 500 and the NASDAQ have been on absolute tears, but notice something crucial. The S&P 500 hasn't posted a daily move larger than 1% since June 24th, which is frankly bizarre given the political chaos we're living through. What this performance comparison reveals is a tale of two markets, one that's climbing steadily, the S&P, and another that's rocketing higher, the NASDAQ. The divergence between large cap stability and tech euphoria is becoming more pronounced by the day. Gold and silver have surged 30% and 35% respectively this year, showing that smart money is quietly hedging against uncertainty while retail chases momentum in tech stocks. The dollar index has dropped 11% since Trump took office, which typically supports risk assets in the short term. But currency weakness combined with potential tariff wars, that's historically been a recipe for increased volatility, not the eerie calm we're seeing now. We're a few days away from Trump's self-imposed August 1st tariff deadline, and the market is basically pricing in what he's bluffing. Bank of America's latest survey shows the most bullish sentiment since February, with fund managers showing record risk appetite. And here's the thing, Trump's track record isn't exactly backing down from trade fights. Schwab's strategists noted that the bull markets often climb a wall of worry, but there's no shortage of things to actually worry about. Currently, both the NASDAQ and the S&P 500 are trading at historically expensive valuations, while we're literally days away from potential economic disruption. The NASDAQ's technical picture is even more concerning. We're seeing parabolic price action that historically doesn't end well. The index is trading nearly 15% above its 50-day moving average, which is extreme by any measure. When you combine that with weakening breadth and declining participation from smaller stocks, you get a recipe for potential trouble. Here's what's really concerning me technically. We're seeing the kind of momentum-driven moves that typically characterize large-stage bull markets. Interactive Brokers' Steve Sosnick told CNN his rally has been driven by momentum and fear at a missing out, rather than fundamentals.
Momo and FOMO are the best way to describe the current environment.
When FOMO becomes a primary driver, that's usually when smart money starts heading to the exits. It's easy to get caught up in the euphoria that everyone's hitting records. The S&P at 6,300, the NASDAQ rocketing higher, and precious metals soaring while the dollar tanks. It feels like everything's working, but let's zoom out for a second and think about what all this means. We're in a weird market environment where bad news is being ignored and good news is being amplified. Capital Economics thinks the US economy can weather a global trade war, but they also warn that Trump's unpredictable approach could trigger a stock market downturn. The assumption that power stays at the Fed and tariffs get watered down might be too optimistic. What's really telling is that this entire rally has been driven by retail investors rather than institutions. Wall Street's money has remained muted, according to Barclays, as we're heading into what could be a make or break week for markets. If Trump follows through with meaningful tariff escalations on August 1st, this whole trade war doesn't matter narrative gets tested real quick. The technical setups in both the S&P and the NASDAQ are looking stretched. The sentiment has gotten awfully bullish, awfully too fast. Key levels to watch: the S&P 500 support at 620, NASDAQ support around 520 on the QQQ. If we see coordinated selling across risk assets while the dollar rallies, that's your signal that tariff reality is finally hitting markets. We're about to find out whether this market can actually climb that wall of worry, or if it's been built on quicksand the whole time, or markets pricing in the right scenario, or are we setting up for a massive reality check? Drop your thoughts in the comments, smash that like button, and I'll see you in the next one where we break down whatever chaos comes in the coming weeks.